Today, Diamond Offshore filed for bankruptcy. I am not surprised. I saw this coming 2 months ago. I even did a Wall Street for Main Street Patreon account contributor audio podcast talking about it. Am I a soothsayer? Am I an oracle? Or did I just work my butt off and do good research, unlike some of the other analysts out there? So what I did do was Diamond Offshore Drilling, as you can see here on your screen, on February 11th, filed an SEC report with their annual report. And I took a look through it, and I did not like what I saw inside there with problems with their debt and cash flow. This is an article that came out to headline on Seeking Alpha on February 10th. Diamond Offshore to be cash flow negative in 2020. They had debt on the balance sheet. When a company is cash flow negative with debt, big red flags. Also, the oil price by then was starting to look shaky, and I was seeing all the news stories coming out about the Chinese economy, problems in Wuhan. My friend trapped in Wuhan at the time was giving me news stories. And so oil demand was in peril, although I don't think the oil price had crashed quite yet. But the disclosures inside the SEC filings from Diamond Offshore were bad. So I was getting worried that if the oil price did crash, and I've been bearish on the oil price for a while now, you can go back and look at all my videos and audio podcasts. My Patreon account contributors got a warning specifically there at the end of February. Cash flow negative, very worrisome. For a short period of time, a company can get away with it, like an ExxonMobil or Chevron. They have a lot of assets. They could sell assets. They do have a lot of dividends, so those are problematic. If they're paying out a lot of dividends, they probably will have to, ExxonMobil and Chevron probably will have to borrow billions of dollars in debt to pay the dividend. But big red flags. I even put the red flags here, that the red flags were in early February, based on the disclosures that Diamond Offshore Management was releasing publicly. This is a Seeking Alpha analyst, not a very good one, doesn't do good research, claiming in his last Diamond Offshore update, he was bullish on oil stocks in December and January. Also does poor coverage of Sandstorm Gold, that Diamond Offshore had its balance sheet quite in order. That's not what was said in the SEC filings, and also the cash flow negative statement with the debt that they already had on hand. Cash flow negative is very bad. For a short amount of time, it's okay. The longer it goes on, the worse things get. So I don't know what he was looking at, but I know what I've been taught about being cash flow negative, and it is really bad. I check people's track records. People have a track record like this, maybe you shouldn't listen to them. This is an article talking about what other companies can go bankrupt. It came out a couple days ago, so Diamond Offshore was on the list. But again, I called this 2 months ago. Diamond Offshore was mentioned in the podcast for patrons in February. Diamond Offshore is specifically named. I warned people about Whiting Petroleum, which was the higher cost Bakken oil producers with too much debt on the balance sheet. So Whiting Petroleum, Oasis, Diamond Offshore, Transocean, and Seadrill were all named, and I gave some more specifics about why. And finally, here is the slides with Transocean and Seadrill. Both are well below $1. I have not looked at the bonds for either company. Seadrill went bankrupt already once in the last couple years. Just because these companies have a large order book does not mean that they cannot go bankrupt. So the entire deepwater offshore drilling industry is completely and totally in peril. Transocean did a very bad, ill-timed acquisition where a lot of the drill rigs are not even being used in the last year or so. So that acquisition was ill-timed. They were betting on oil price rally, and then the perfect storm of bad news with complete and total demand destruction from the coronavirus, and now oversupply and the price of oil crashing makes drilling deepwater offshore wells, which are very costly. They need at least $50, $55, $60, $65 a barrel to be anything close to economic. So it makes hiring deepwater drilling offshore rigs very uneconomic. So there will be more blood. This was predictable. I did not have to be an oracle. I just work my butt off and do good research and analysis and try to find these things ahead of time for my Patreon account contributors to warn them to stay away from these things. Meanwhile, there's other analysts that are saying that these things were turnaround value plays. In December, January, and early February too, there was a bunch of analysts saying that a lot of these oil stocks were good value plays. And I was warning people, stay away from these things, because if things get worse with the coronavirus, and I was already bearish on the Chinese economy prior to that, but the information I was getting from my friend in Wuhan and the other sources I was seeing about what was happening in the Chinese economy was that the oil demand was collapsing. And look what we have now. We have the largest drop in oil demand probably on record, and it may get worse. And the oversupply in oil may get worse. and we could see just enormous shorting of the futures curve. So this contango, I've spoken with hedge fund managers like Tavi Costa that they may continue to short different parts of the oil futures curve, trying to get rid of the contango.